Vaibhav. In today's session, we are seeing mixed sentiments prevail in the equity markets. For US equity indices, there is a story of contrast where we are seeing some buying momentum in the Nasdaq, whereas the Dow Jones Industrial Average is seeing some selling pressure, not exactly uh, too much in the magnitude, but still slightly bearish undertone there. And this has been the story for almost a couple of weeks now, where we have seen the difference in trajectories for these two key equity indices. And today, the same thing is unfolding. If we take a look on the European equity indices, there was not much of a momentum. Of course, we saw the the DAX hitting the all-time high, and some bullish momentum was there. But apart from that, nothing much to write home about. And moving on to the currency segment, where the instrument of interest is going to be the Euro USD. In last session, also, I had talked about the possibility of a breakout on the bearish side for the euro, and that's what we are seeing in today's session in Euro USD. And I think now that we have some key levels in sight, the breakout, the euro has even gone on to touch the levels below 1.190 levels. And I think as the session is likely to progress, we might see some clarity emerge, and the trend, which has been bearish for quite a while now, is likely to again take a toll, and we might see Euro USD declining further. And in next couple of sessions, we might even see it retesting the levels of 1.18. So that's what the possibility is, and we will try to exploit the situation to our advantage. If we consider the data rocket for the day, there were these key releases coming in for the European economy of the Germany, which is a key economy in the euro area. And here we are seeing that economic sentiments are picking up, and for the month of March, these are even higher than the expectations. And if you consider the economic sentiment index for the euro area as a whole, even that has shown turnaround, and it has gone higher and substantially higher compared to the prior month. So both these readings are much better than the expectations. But still, I think the uptick which we are seeing in the euros data is not really likely to help euro USD much, as these days the story has now shifted to US Treasury yields, and that has helped the dollar gain strength against most of its major currency peers. And as a result of that, I think the bears are likely to prevail in the euro USD, notwithstanding the outstanding economic data which we got for the month of March. And later in the day, we also got the economic activity data for the United States. We got the retail sales and the industrial production number for the month of February. And as expected, there is a softness in the economic data. The retail sales are negative for last month compared to substantial growth which we had observed in the month of January. But this decline is mainly being driven by the unusually cold weather which we saw in the last month, and as a result of that, even there was power grid failure, and most of the economic activity had come to a standstill, and that is being reflected in the numbers which we got for the month of February. The industrial production is also showing a decline, but I think for the month of March we might see a peak, and there might be much better numbers in next time around. So let's shift our attention to the technical outlook. First, we will see what's happening in the Euro USD, and then we will see light crude oil's outlook also, where I think some key levels have emerged, which I think are going to be the guiding factor for its price trajectory for next couple of sessions. So we will also see its technical outlook. First, we will take a look on the Euro USD. This is the daily time frame chart, and here after getting close to the 38.2% Fibonacci retracement of its prior decline. Again, the bearish momentum has picked up pace in the Euro USD, and for last 2 to 3 trading session, the momentum is clearly bearish. And as I had talked in the prior session also, I think it's better for us to keep looking for the bearish trades, the short sale trades, and that will be in keeping up with the trend, and as a result of that, we will have much higher probability of ending up with a decent profit. So we will see some of the key levels which we have to use in today's session as a marker. And I think as long as Euro USD is holding below this for support of this one's pivot point series, we should be looking for shorting opportunities only. And here we can adapt the strategy to sell on the fresh breakouts as is the condition right now. Even current valuations, I think, are good enough. If we can keep the stop loss closer to the day's high, that should be good enough for the day for the US session, and I'm not really expecting the Euro USD to again go on to touch the day's high. Of course, anything can happen in the market, but keeping up with its trajectory where we have both these technical parameters, the regression curve, as well as the pivot point series. Both these formations are more conducive for the initiation of the short sale trade, and keeping up with that, I think we can rely on the lower time frame chart to minimize the risk which we will have to take. Of course, in any trade, there is a risk, and we always have to keep that in mind. So, if we are looking for any shorting opportunity in today's session, I think this confluence area of 50, 100, and 200 SMA holds the key. As long as price is hovering below this, there is the confluence area. The price range is of around 1.192. So anywhere in between 1.191 to 1.192 should be good enough, while keeping the stop loss anywhere closer to the immediate high, which was established just a couple of hours back, closer to 1.194 to 1.195. So there is a risk of around 20-30 pips on the higher side, but on the lower side, I think the targets can be kept wider, as I feel if we have a sustained breakout on this bearish side, then there is not much of a support in sight on the lower side, and as a result of that, we can even expect this decline to extend in due course of time, not in today's session itself, but in next couple of sessions, the probability is fairly high that we might see the retest of 1.180. And keeping that in mind, we can go for this trade. And in near term, you can even adapt the stop loss target ratio of 1 is to 2. So if you are taking a risk of around 20 pips, the 40 pips target should be good enough. And if you want to extend it, then well and good. You can adapt that approach as well. Now let's see the light crude oil's technical outlook. This is the daily time frame chart, and here the light crude oil has again come to touch this prior swing high area. Last time around, we saw this buying momentum as it had come closer to this price range of around $64 per barrel level, and then this turnaround happened and pushed it closer to the $66 per barrel level. But now again, it is losing that momentum, and in today's session in particular, we are seeing substantial selling pressure there, and as a result of that, I think it will be better for us to also stay on the side of the momentum, and keeping that in mind, I think if we have a breakout below this prior swing high zone, which has also acted as a support for last couple of sessions, then we might see the light crude oil's decline extending even towards $60 per barrel level, which was also its recent swing low. So that area can also be retested again if we have this breakout below the pre-support area, and in that case the formation will more or less look like double top, as you have this near identical closing highs. And if we have this breakout on the lower side, then that formation will be further solidified. So in near term, I'm expecting more of an sideways momentum with a bearish undertone, and in today's session also, I'm expecting the light crude oil to continue to trade with the bearish bias, and as long as price action is unfolding in this lower band of this regression curve, and also if we consider these prior steep upward trajectory, then that momentum is now waning, and here we have flattening of the regression curve, where the price momentum has also dropped on the lower side. And if in due course of time, if we see the breakout below this lower band, then that will put further pressure on the light crude oil's regression curve, and it might even start to decline in near future. And even as of now, I think if we use the near-term resistance area and look for fresh breakout on the lower side, we can even profit from the changing circumstances. The pivot point series is not that bearish. We still have the price action unfolding in the bullish side of this central pivot point, but it has struggled closer to this first resistance of this month's pivot point series, and it has happened twice. And as a result of that, I am quite hopeful of this decline extending even toward this central pivot point in due course of time. So if that is going to happen, if that is the anticipation, not it's not like it's going to happen only, but it's anticipated, and it might happen or might not happen, but the probability looks good. So keeping that in mind, I think the confluence area of 50, 100, and 200 SMA, which is there around the US dollar 65 per barrel level, we can use this price zone, and we can keep the stop loss little above this immediate swing high. The price marker is there around US dollar 65.5 per barrel level, and if we are looking for the shorting opportunity anywhere in the price band of US dollar 64.5 to US dollar 65, I think that much risk can be taken. And if in today's session we don't really see any turnaround or any buying momentum on the lower side, and if the session closes below this 200 SMA area, then in next session, I think we will have much more higher chances of the decline unfolding in the light crude oil. And as I said, in due course of time, the price target of even closer to US dollar 60 per barrel can be expected. But if we don't really want to wait that long, the risk reward ratio of 1:2 is always there. And for the risk of around 60 to 70 points, in the light crude oil, we can expect 1.5 to $2 per barrel level of profit if we happen to be on the right side of the trade. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Do subscribe to the Microscopy webinar channel to stay updated on the market developments. See you next time. Till then, goodbye.